Just a quick one before we get started here. If you guys are looking to get funded, I'd highly recommend Funding Engineer. I've traded with them many times before and have found them to be the most trustworthy company to work with. They have 4 leading industry challenges here as we speak, and if you do want to support me, please do click the link in my bio and my description to sign up so I can continue giving away to you guys. You will also be entered into a bi-weekly giveaway when you sign up through that link. So that being said, we'll head back to the video. What is good, everybody, and welcome to today's new video, where in this one we're diving even deeper into market maker models, what actually drives them, and how institutions actually trade these themselves. Now, we're diving into the specific logic behind these things and why they appear, and then I'm going to take you into a few tricks I use to navigate them and actually find valid entries during these. So before we get started, I think you all know what a market maker model is. I just wanted to take you into an example here and then show you the different stages of one. So as you could just see, we were on the daily chart where we came into a discount from this swing to this high. We have a discount and now we are targeting this high. This move inside here from this low to this high, the buy side of this curve that is forming now becomes our market maker model. So from here down to here up to here. On the 1 hour chart, you can see that this low here counts as our smart money reversal, right? So we have a smart money reversal at the low or the high in a market maker model. We then have a stage of distribution. Now, some of you may see this, if you're more advanced, this as the low risk buy, but for the sake of the video, I'm going to assume that most of you are not, and we will call out distribution stages. We'll call out obvious ones rather than the more advanced sort of charter level distribution stages. So we have a smart money reversal here, outlined by the grey box. Once we come into that discount PD array, we then move up and have another level of distribution. Now this here becomes our low risk buy. Of course, it is a sell on the market maker sell models, but for these examples, we will use the buy model. Now we have a low risk buy, which is our first stage of distribution. We then, if you take your eyes from the low risk buy up to here, do we have another level of distribution? And inside here, you can see from here to here, you can see this is around equilibrium. And if you take your eyes inside here, we have down close candles and a fair value gap, right? So we've had our low risk buy. The second stage of the market maker model becomes the first distribution. Now, this PD array here is used as our first distribution. We have a leg up, come back into a discount, order block, trades into the order block, and then moves away for another level of distribution. And that, if we label it, is our first stage. Now, we have the smart money reversal, low risk buy, first stage of distribution, and then the final stage. You may see more levels of distribution afterwards if we're not at the original consolidation yet. However, our final stage that I personally like to trade is the second stage of distribution. And as we move forward, you can see we leave this down close candle and the fair value gap is used again as we come inside here. So you could label this as your second stage of distribution, as it is technically. Or when we get a leg up, retrace into this down close candle. This counts as our second distribution. For the sake of this video, I will use this as the second stage of distribution. Now, a few things to recap. Our low risk buy, despite the name, is usually the hardest entry to actually catch because we haven't moved away from the smart money reversal very much often when it forms, and you can often get liquidated thinking it's going to be a reversal, which is what market maker models are by technicality. We're always reversing. you may time it wrong and then we wick below and then have a breaker. So a scenario like this often occurs. We have the smart money reversal there. We break lower, taking out the low, move up, and then use it as a breaker before giving our first stage and second stage. And I don't like to trade the smart money reversal. You may see this referred to as a turtle soup, but turtle soups are really hard to time, and there's a lot of things that go into them. You need a lot of practice. So I wouldn't worry about trading turtle soups too much. So I would ignore the smart money reversal and the low risk buy. And then the stages I like to trade are the first stage of distribution and the second stage in distribution. So a little recap on these. The second stage of distribution actually provides the quickest price move. So as you can see here, once we formed it and price traded into this down close candle here, you can see the huge leg up we got with this 2 p.m. candle. This stage of distribution is the quickest, and it will run to the original consolidation the quickest out of all 3 or 4 technically stages. The first stage of distribution often is really easy to see, I find, because it's after the low risk buy, so you've already got the confirmation that we want to move up with the low risk buy, and then the first stage of distribution is easy to see. So what you'll often see is, let's say we have a market maker model, we have our smart money reversal above there, break lower, and then low risk sell. And then you can see after the low risk sell, we have the smart money reversal, low risk sell. After the low risk sell, this leg up that provided the low risk sell actually usually acts as an order block and is really easy to trade as we just do something like that. So obviously we have the smart money reversal above this high into a PD array, and then low risk sell. That leg that came up to create the low risk sell often has obviously up close candles in it. Them up close candles are then used as the order block that provides the first stage of distribution. So it is often quite easy to see after the low risk buy. Like in this scenario here, if I was using a more advanced stuff, I would tell you that this is the first stage of distribution as we trade into these candles that were formed during the low risk buy. But I will dive into that in another video. I don't need to go into that right now. So now that we have the market maker stages down, let's dive into a few examples of these, and we will just brush up on our techniques in entering them and how to actually visualize them. Now we are on the US dollar versus the Swiss franc, and I want to show you a daily chart example of this model playing out. Now, the basic of the market maker model and the original consolidation starts at all. This is what starts everything. We have a consolidation in here, accumulation, or actually this return to consolidation is accumulation, but more accumulation, and a smart money reversal when we trade into a PD array or a previous high. That one's one for the notebook. When we trade into a PD array and we have order flow, so we're expecting downwards movement, we trade into a premium PD array. Now we expect more continuation downwards. That is where our smart money reversal forms. Now, we have 2 stages of accumulation normally. Then our smart money reversal forms. We wait for a shift in market structure below this low. And why this low? Because we have a high and a high either side of it, giving us our swing low. And then we also have a breaker inside here, right? So we have a breaker, price trades lower. You may see that as a low risk sell. And then we have another low risk sell here. So twice we came, if we measure this, we came into a premium. This wouldn't have been your low risk sell because we hadn't come into a premium. Look, this swing to this low, you can see we don't come above 50%. However, traders get faked out into thinking we're heading lower there because we have a swing, and now we take out the liquidity above these equal highs, trade above 50% to a premium, and then leg lower. So this is our low risk sell. We then trade lower, fair value gap, order block, first stage of distribution. Remember I said the first stages of distribution is usually pretty easy to see because the low risk sell that was created, that up close candle is often used as the level of distribution. You can see we trade into about the midpoint of it. I'm just guesstimating here, that looks about the midpoint. And then move lower, taking out liquidity and liquidity. Also, a quick thing to mention, now this is more advanced, but you don't have to be too caught up in this if you are learning the basics of the market maker model. Now, gaps that we used and order blocks that we used on the buy side of the curve can also be used on the sell side of the curve. So notice we have a gap inside here, right? If we extend this gap out in time, where does the low risk sell form? The low risk sell forms exactly inside this gap. So an old gap that was once used for buying, because look, if we zoom in here, old gap used for buying, take us above this high, right? Normal fair value gap, buy above the high. Ones that were used for buying on one side are used for new selling, okay? So we have a distribution from the old gap used on this side, and then the order block, and obviously we continue lower. It's the same for order blocks on this side. So order blocks that we used on this side, we can expect the stages of distribution on the other side of the curve to be used in these sort of areas. So like, for example, this order block, we break above, trade into, midpoint, move higher. Where does our second stage of distribution form? And now this market maker sell model is still in play. But where does this form? Right into this order block that was once used for buying. So these are little tricks you can use. And obviously we have a PD array inside here, fair value gap, that forms inside the previous order block. And then we move quicker, lower. Now this one hasn't completed yet, but that to me is our second stage of distribution inside here, because smart money reversal, low risk sell, distribution stage 1, and a second stage of distribution. Now this, again, remember, this stage should run quickly below the lows down here. And as you can see, we've had 4 bearish days in a row, and it is quickly moving towards these targets, these equal lows. Now, as you can see, there are a lot of steps to this market maker model, but once you start to see them and trade with them every day, you can come to terms with them pretty easily. So that should bring us towards the end of the video. If you did learn something today, please do drop a like and help us reach more ICT traders so I can continue to post this content and try help as many people as possible. So if you did enjoy, please do drop a like and subscribe, turn on post notifications, and make sure you check out all my socials in the description below. And also, if you are looking to get funded, as always, please do look at Fund an Engineer and use my link to sign up. We have bi-weekly giveaways going on. So I've partnered with Fund an Engineer to be able to give away 10k accounts to you guys. So if you do use that link to sign up, I will automatically put you into a giveaway and give you an extra entry for that giveaway that we do bi-weekly. So with that being said, I will catch you in the next one. Thank you as always for watching.